Electronics and home appliances sector saw even sharper gains, led by smart device manufacturers reporting a over 120% year profit surge. For more on China's economy and the global impacts of U.S. tariffs, to bring our guest Jameel Ahmad, Chief Analyst at GTC, an online trading brokerage. Jameel, thanks for joining us. China released a range of key economic data this month, including data on industrial profits. What is your take on the current state of China's economy as we start to unwind the first quarter?
I would say cautious optimism, because you're looking at some of the economic data reports, such as what you just mentioned with the industrial production, where the profitability has increased. And you're actually seeing the Chinese economy is ticking along in I would say, a moderate pace, but maybe a sustainable pace so far for the first quarter. Consumer spending seems to be picking up. Retail sales also suggesting the same. Of course, you've had the Chinese authorities have come out just over a week or so ago with a 30-point plan to help improve the domestic economy, and that the growth target for 2025 will remain the same as 2024, which is 5%. That was a little bit more of a surprise, not because of particular concerns on China, but because of the concerns around the global impact of these trade disputes and the aggression that the US has shown when it comes to trade tariffs on so many different trading partners, and what impact this is likely to have on the world economy as we continue to head further into 2025.
So let's talk about the trade tariffs you mentioned. What impact are the latest 25% tariffs announced by the US likely to have on the commodities market, which you're closely tracking, and the global economy as a whole?
Well, this has been another jack-in-the-box surprise moment, because this has come overnight, where it was just yesterday where there was more optimism in the global market that these so-called reciprocal tariffs that are supposedly in place next Wednesday, April 2nd, was supposedly going to be dialed down somewhat. But here we go, we've got more theatre and another surprise with the tariffs. The likes of Canada, Germany, Mexico, South Korea are all going to be impacted by these, because they're the largest actual exporters to the US of cars and automobiles. But overall, we're seeing these tariffs are turning into somewhat of a pantomime, because will they be imposed? Will they not be imposed? And it's become a theatre or somewhat of a TV series. It does appear they're going to be imposed, but are they going to be imposed to the amount that we thought they were going to be and what's being feared? There's what time will tell, and that's why we're all going to be watching this TV series that's going to be ongoing with these trade disputes, and just see where things head.
Yeah, Jameel, of course, our show will talk more about these trade tariffs on auto products from the US later on the show. And let's talk about the assets that investors are looking forward to, because the persistent uncertainty surrounding trade tariffs is causing a lot of turmoil on global markets, including the equity markets. And we see gold is very hot now. So what are investors looking at the right assets to invest at the moment?
Yes, so I used the metaphor of this being like a TV series over the previous question. I think this provides quite nice context towards this one, because this time last month, that series was suggesting that these tariffs were a negotiation tactic. Global markets were quite calm. US dollar was still strong. But 1 month later, there's a lot more concern that actually these tariffs are serious and they will be imposed in some way, shape or form. We've seen the sharpest fall in the US dollar for a number of years, because rather than this being seen as a negotiation tactic, actually it's seen as the US is being aggressive against so many different trading partners, it's battling across so many different fronts. This is going to hurt the US economy hardest. The US consumer also accounts for the largest component of US GDP, so that's going to impact the US economic momentum. And then you also take into account that the steady go message that we're trying to deploy here when it comes to investment assets is that gold continues to hit and reach more all-time highs, above $3,000, which just a week ago was the magic number we've never seen. As these tariffs continue to look like a prolonged issue, it does appear to maybe just be a matter of time before we see $3,100. And outside of gold and those metals, I don't think there's any other assets you can particularly look for right now, because there's just so many uncertainty over these tariffs overall.
Did you say 3,400 for gold?
3,100, that's the next
100.
level we're looking at. But should these tariffs continue, who knows? The ceiling might be the limit.
Thank you so much. Always nice talking to you, Jameel Ahmad, for us. He joined us from Kuala Lumpur. Right, the World Economic Forum has joined Hong Kong Exchange and Clearings to host its first financial service